You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, March 20th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know is markets await the Fed announcement from Powell. The Federal Reserve is not expected to take action on interest rates at the conclusion of its 2-day policy meeting at 2 p.m. Eastern, keeping the Fed funds rate in a range between 2.25% and 2.5%. Fed Chair Jeremy Powell is due to hold a press conference half an hour after the release of the policy statement. The U.S. Central Bank will also release new forecasts for economic growth and interest rates, known as the dot plot. The Fed's December projection implied 2 hikes this year, but the new one is widely expected to anticipate at most a single increase. The Fed is also expected to lay out a plan to stop shrinking its $4 trillion balance sheet, or so-called quantitative tightening. Many policymakers have suggested the Fed is likely to continue the process and stabilize its bond holdings by the end of this year. The U.S. dollar index was at 95.95 by 5:35 a.m. Eastern, not far from Tuesday's 2.5-week low of 95.73. In the bond market, U.S. Treasury prices inched higher, pushing yields slightly lower across the curve, with the benchmark 10-year yield slipping to 2.59%. The second thing to know today is British Prime Minister May to request a short Brexit delay. The British pound remained hostage to headlines on Brexit. Just 9 days before the March 29th exit date, British Prime Minister Theresa May will request a short delay to Brexit in a letter to European Council President Donald Tusk, after her plan to hold a third vote on her deal was thrown into disarray by a surprise intervention from the Speaker of Parliament earlier this week. But the ultimate length of the delay was unclear amid the political chaos in London. May had earlier warned Parliament that if it did not ratify a deal, she would ask to delay Brexit beyond June 30th, a step that Brexit's advocates fear would endanger the entire divorce. Sterling was down 0.35% at $1.32.2, off its 9-month peak of $1.33.80 that was hit a week ago. The third thing to know today is Wall Street is set for a higher open. U.S. stock index futures pointed to a slightly higher pre-open, as investors looked ahead to a policy decision by the U.S. Federal Reserve, which is expected to shed more light on interest rate plans for the rest of the year. Market players will also be watching for any important developments on the U.S.-China trade front, following reports that U.S. officials are concerned China is pushing back against American demands in trade talks. Elsewhere, European shares retreated from near 6-month highs, with German stocks leading losses, as chemicals producer Bayer sank 12%, following another U.S. court verdict on weed killer Roundup's linked to cancer. Also weighing on the DAX was BMW, down more than 4% after it issued a cautious profit outlook. Earlier, markets in Asia held to tight ranges, but were broadly supported near 6.5-month highs. Japan's Nikkei climbed 0.2%, while mainland Chinese shares were flat. Fourth thing to note today is FedEx is set for a rough day. Shares of FedEx were down more than 6% in pre-market trading following the release of the logistic company's disappointing third-quarter earnings and weak full-year outlook. FedEx posted earnings per share of $3.03 on revenue of $17.01 billion after markets closed on Tuesday. Analysts polled by Investing.com estimated earnings per share of $3.14 on revenue of $17.62 billion. The shipping giant, widely seen as a bellwether for the global economy, also slashed its full-year guidance for the second time in 3 months, citing slowing global trade. Executives also blamed the results on the cost of launching year-round 6 days per week operations at FedEx Ground in the U.S. and continued weakness in its international express business, which includes former Dutch delivery company TNT Express. And the fifth thing to note today is EIA oil supply report. Got to know about that. In commodities, the U.S. Energy Information Administration will release its official weekly oil supplies report for the week ended March 15th. That was at 10 a.m. Eastern Time this morning. Analysts expect the EIA to report a gain of around 0.3 million barrels in crude inventories, although the American Petroleum Institute said that U.S. crude stocks actually fell by 2.1 million barrels last week. U.S. West Texas Intermediate crude futures were down 18 cents, or around 0.3%, at $59.11 a barrel. WTI hit a high of $59.57 a barrel on Tuesday, the highest since November 12th. International Brent crude oil futures were at $67.62 a barrel, up 2 cents, or roughly 0.5%. Brent touched a $68.20 per barrel price on Tuesday, its highest since November 16th. Our second story today is from CNBC.com. Mortgage applications set a record for the third straight week as lower rates largely benefit the wealthy. Lower rates are not giving mortgage demand any sizable boost, except when it comes to higher-end homes. Total mortgage application volume rose 1.6% last week from the previous week. That's according to the Mortgage Bankers Association's seasonally adjusted index. Volume was 1.8% higher than a year ago. The gains came mostly from refinance volume, which is highly rate sensitive. Refinance applications rose 4% for the week and were 3.5% higher than a year ago. Interest rates had been higher last year, but as rates now fall, more borrowers can benefit from a refinance. The average contract interest rate for a 30-year fixed-rate mortgage with conforming loan balances, which is $484,350 or less, decreased to 4.55% from 4.64%, with points decreasing to 0.42 from 0.47, including the origination fee, for loans with a 20% down payment. That is the lowest rate since February of 2018. And that, ladies and gentlemen, is news you can use for today, Wednesday, March 20th, 2019, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.